Walmart earnings per share rises 45 cents in fiscal year 2011, the largest increase in the company's history. That is a very impressive result. That increase alone is more than our total earnings per share reported 18 years ago back in 1993. But let's don't kid ourselves. We know that we were up against some very tough economic headwinds. Our customers' wallets continue to be squeezed, surging fuel prices, unemployment continued to hover around the high 9% range, levels that represent some of the highest unemployment rates we've seen in almost 30 years. And while the consumer confidence seems to have stabilized, it's still hovering to a level that represents more than a 50% decline since 2007. Obviously, we have faced some really challenging environments, retail environments. Okay, we know it's been a tough economy. So how did we do? Well, I'm pleased to let you know that your company continued to deliver a strong financial performance. You were able to grow sales to $419 billion last year. Now that's a 3.4% increase. While that might not look like much, that still represents an additional $14 billion in sales. To put that in perspective, that's larger than the revenues of 2/3 of the companies in the Fortune 500. That is quite an accomplishment given the tough economic headwinds we felt throughout the world. Now last year, we provided the investment community and said that with guidance, and we said that we would grow our earnings per share between $4.08 and $4.12. If we could do that, that would mean around a 10% increase from the prior year. I mean, and that's a pretty tough challenge, right? I mean, come on, the economy's tough. It didn't stop you. We exceeded that top range. Our earnings per share increased 12.1% to $4.18. That is an excellent result even during very challenging economic times. Again, you have a lot to be proud of this year. Give yourself another round of applause. You've definitely earned it. Now, if you remember from last year, we talked about 3 priorities. We wanted to focus on growth, we wanted to focus on leveraging our expenses, and we wanted to focus on returns. Let's start by looking at growth. Now, we know there may be a few people out there that are questioning our growth potential. In fact, I've got an article here with regards to your company's growth that I wanted just to quickly share with you. The general conclusion is that Walmart has experienced great growth in the past, but the writer is kind of doubtful that we can continue. Here's what he says. Some are skeptical of Walmart's ability to do in the future what it has done in the past. After reaching a critical size, most companies begin to see diseconomies of scale as there becomes so much going on that the company becomes strained. We don't know of a single retailer in the history of our society that has ever grown at Walmart's pace without slowing at some point. And then he goes on to basically say he doesn't think we can grow anymore. Here's the kicker. That article was written in 1985. In 1985, your company reported $6.4 billion in sales. Now, I want you to take a look at this. Since that statement was made, Walmart has managed to grow sales to $419 billion. And as you look at that, I want you to know that we've grown sales by 6,500% since that time. I'd say that there was quite a bit of growth left after all, and there's more to come. Okay, so where are we going to get growth? Where are we going to get that kind of growth? Well, let me show you. We have incredible growth opportunities both in the United States and around the globe. We know that our Walmart US and Sam's Club segments, thank you, Sam's. We know that they're excited about continuing the growth. One estimate has projected that the U.S. retail market is expected to grow by almost $800 billion just over the next 5 years. So there are definitely opportunities in the U.S. And how about international? We know we have a lot of growth potential in countries like China, Brazil, India, Mexico. In fact, all of our countries. And let's not forget about global e-commerce. As you're going to hear from Eduardo Castro-Wright later, we know that there will be a significant amount of growth within the e-commerce channel. In fact, in just the markets that we currently compete in, retail growth is estimated to be almost $2.4 trillion over the next 5 years. I wonder if our growth stalled. What do you think? I don't think so. Now, let's shift our focus to the second of the 3 priorities and talk about leverage. Now, leverage just means that we want to grow our expenses at a slower rate than sales. So let's see how we did. Now, take a look at this growth trend. Now, usually when we show trends like this, they're relating to sales growth, and a positive trend would be a good thing, right? Well, in this case, the positive trend you see here is actually not a good thing. But in October of 2009, we made a commitment to focus on leveraging our expenses. And since that time, what do you think has happened? Exactly. By focusing on this commitment, you have been able now to reverse this trend, and we are able to leverage our expenses last year. Great job. So why is this so important? Well, the answer is that it's all about the customer. By leveraging our expenses, we can lower our prices. We pass those savings along to our customers in the form of everyday low prices. And we know that our EDLP strategy leads to greater value for our customers, which leads to higher sales, which leads to our third and final priority, returns. Now, last year, we reported a record $11.5 billion returned to shareholders through dividends and share repurchases. Now, obviously, we were very excited about that performance, but in true Walmart fashion, we wanted to do even better. So, do you think we were able to do it? You're right, we certainly did. We returned a total of $19.2 billion last year. That exceeded the prior year by 70%. I think that's got to be headline worthy. Come on, let's get the headline up there. There you go. Now, if you remember from last year's shareholder meeting, we introduced a new $15 billion share repurchase program. Since that announcement, we've repurchased about $13 billion of our own stock. And that's a really good indication of our strong free cash flow over the past year. Now, due to that aggressive schedule, that only leaves us with about $2 billion of capacity left as of today. All right, get ready for this next part. Here comes another one of my headlines. Our board has now retired the remainder of last year's program and replaced it with a new authorization of $15 billion. Again, that's a reflection of the strong financial performance of your company. Now, in closing, I'd like to note 2 things to you. First of all, I want to salute all of you for your excellent performance last year. Thank you. Now, as you've heard mentioned today, and you've seen that not only are we the world's largest retailer, but we're the world's largest company, sitting at number 1 on the Fortune 500 list. All right, but let's don't forget what Mr. Sam said a long time ago. He wanted us to be the best retailer in the world, not necessarily the biggest. So let's be the best retailer for our customers. Let's be the best retailer for our associates. Let's be the best retailer for our communities. And let's be the best retailers for our shareholders. Thank you for another great year, and thank you for everything that you do.
I have so much fun visiting this place. To me, it's very important to be here.